Hello friends, just check that we're still recording, which is good to know that I'm still showing up on the screen. Pardon me. Let's take a look at the link versus Bitcoin, link versus US dollar prices, and see how things are getting on and what's really going on here, and have a little unbiased, free sort of interpretation of the market. Look at that drop down in the ADX there and how these things are crossing over. That's kind of interesting. Look at the MACD being so high here compared to this previous high. Well, the price action was high and then lower there. That's kind of interesting. What we call that? We call that bearish divergence. Look at that bearish divergence happen between these two high here before the drop down on the RSI. Look at that, that's interesting. And look at this here, oh, there's two places here and there's bearish divergence there and we had a drop down. Oh, that's interesting overall. What have we got here is this, oh, look at that, that's bearishly divergent. Sure. Well, what else have we got here? Well, here we are at this 50% zone, you know. Things have been quite bullish recently overall, and this could be considered to be somewhat of a approaching an oversold zone almost as well. Neutral, you know, when you're in a bull market, kind of, so to speak. But are we really in a bull market, or are we have we got this downward sloping resistance here overall? And are we in this sort of, are we thinking more along those lines, or are we thinking more along these lines? And is it some sort of broadening type structure? What have we got on the go? Let's just kind of take a closer look again then and zoom on in and see where we've come in terms of the price action, because the oscillators themselves on the daily time frame, actually let's go to the 2-day time frame. The oscillators themselves are giving us a somewhat bearish picture in terms of the price action. Let's take a look at the price action itself and where we've come from, where we're going. Well, we had a talk yesterday about a fairly sort of crucial price in terms of the bullish thing. Yesterday during filming, we were above this line here at 47,792, talking about the importance of maintaining ourselves above there so we keep this Fibonacci retracement we've got on here, there you can see moving around, invalid. And this line here coming in, this one here, I know maybe this is really far too hard to see. Let me just make this bigger. This 236 here is, you know, we're below that now, and we have a valid Fibonacci on here. So this was drawn in speculatively, going body to body at the minute, and there, sure enough, we're below that. So let's stick this in wick to wick. It was speculative, it was invalid, now it's valid. Am I Mr. Fibonacci? I'm not, but I know I come across as that sometimes. There it is, wick to wick. Not a big change, still below it. And we had, did I draw this in there now? I think this was on the chart already, wasn't it? We've come below this line here, which we spoke about yesterday, it's sort of 47,000 as well, below the 21 EMA. That's not great. That's not great. What could we be looking for then to find turnaround points here? 45,000 perhaps, you know, where we have the 382 coming in at, and we also have the 50% retrace line on this other bigger Fibonacci. What did we actually manage to achieve here? We came up as high as the 786. That's a common retrace point, as we spoke about at the time, in around there, and we put in a lower high. What is this as well? This was a low, and what was that low characterized as? Well, you could say that was a lower low. So overall, at the minute, you know, we're in this downward trend. The question actually has to be, and although it's grotesque and we're looking at some very gross movements in terms of the price, the question has to be, you know, will we actually see it go down below 33,000 and put in another lower low and trend towards the downside now at this point here? Could that happen as this volume diminishes and all the rest of it, or will we see something else going on the go? What have I got here? These are lines I just drew in myself at the end of previous episode to say that overall on this weekly time frame, or you know, just generally speaking, we're kind of parabolic versus versus Bitcoin. Great. So you know that overall you can remain fairly confident in terms of Link in terms of how as it, you know, does it perform? Well, it does. It performs. It can. But what we want to see happening in the meantime is the prices actually turn around here, get supported by the 55, you know, or whatever, and move up above that line of the 47,000 and back up above 48,000 as well, before we can actually start thinking about things as being positive again. You know, whether that happens on a daily, weekly, or whatever time frame, that's what we're kind of looking for. They want the volume to, you know, not pick up necessarily as the prices are decreasing. In fact, if they could, if volume could dry up here and around some area where we have potential support at the same time, and then turn around and the prices turn around and then the volume pick up thereafter, that would be better. That's what we'd be looking for. Overall, let's go up to the 2-day time frame. just for a second here, where things can be a little bit clearer, you know, in terms of having come down here to this line, broken it, come down and up above it, retested off of these other previous, you know, zones, and back down again, and take a look one last time at the oscillators and say, you know, between these two highs it was divergent, but how much does that, how divergent really was that, and what's going on, and where are we now? Well, we're still above the neutral line here. We could see things overall turn around in any of these zones and go on up the way, and if that were to happen, then this would be a low, a high, you know, highs and a higher low overall compared to this trade frame, and maybe the oscillators would have had a chance to reset somewhat so it could go up and make higher highs, and then thereafter that make an additional high thereafter, you know, as opposed to the situation being the way it was before. What we'd have been looking at is coming in here, setting in a high, most likely doing it with bearish divergence, and then having to come in here and sort of cope with a sort of, you know, a bigger term here to here, across, you know, sort of start of March, end of April, as opposed to just like over a week or two. Bearish divergence there, working against that at the time, and perhaps, you know, we would have seen a deeper retrace thereafter. So, you know, anyway, common retrace point for turnarounds and whatnot was 236. That's not happened. Another common retrace point for turnarounds is this 45,000 area. We've come down, you know, we've left a little bit on the table for the other guy or whatever, but we've damn well got close enough. It's close enough. 45.9 there is, or whatever. So, you know, potentially in terms of the 2 days, well, that's where the 21 EMA is coming in. There's a few things here over on the 2 day which kind of mitigate in terms of the bearish scenario, and which is clearer to see on here than on the daily or on the 12-hour or anything. It's clearer to see, but, you know, you could have this 21 EMA operate as support for us, as we've seen in the past. You know, it could even just at least think about it slightly as we're coming up to these areas. We've seen it in the past, you know. So that's the story. Let's go over to the USD prices. We had this upwardy wedge thing still on the go, still happening. Let's just move it around a bit. No doubt I drew this in linear or something like that, and that's why it doesn't fit, but let's just shiggle it around a bit and make it fit better. Where are we here? Well, we've not broken out of that quite yet. Incidentally, before I started twiddling it around, we hadn't broken out of it either. Right, and what could we have here? Well, you could take a measure move for the back of this thing, stick it down there, say, hey, look, you know, we could go down to the 50% retrace line, $3.20. That could be where we could see a turnaround at. Maybe we need to do that in terms of these oscillators and whatever, which are coming in right now, you know. But if this comes in and forms as a local high, then, you know, you've got this convergence, I guess here, where on the RSI, you know, that's up higher than this one, and then this, and you'd be looking at this in terms of being a downward trend, you know, and it's not bullishly divergent there in that sense or whatever necessarily, with this being a low. Right now you'd have to wait for another low to come in and whatnot, and then all the pain that goes along with that, because we're looking at $1.80 if that's the case. We don't want to see that happening overall. Instead, it would be nice if this was just a sort of pennant on the go, and instead we just went towards the upside here. I'm keeping the distance more or less the same as I just wanted the angle to be straight there, so screw it, whatever. So we're looking here and we were saying, can we get up as high as 480, 440, 4444, off the back of maybe some measure move out the back of this thing, take us up above the 786 here retracement area and the 786 here, and try and go in here to try and, like, you know, trend towards the upside properly, and all the rest of it in the face of this diminishing volume and potential for divergence to be coming in here, in and around this area potentially, but really, you know, looking at it and saying, in this shorter term time frame, really we've had an overall upward trending movement here on the RSI and whatnot. Let's try and break above previous zones of resistance here on this thing as we've come in and we've been thinking about it. You know, this is where we're kind of looking at now. We've had this dynamic in and around this zone or whatever in the prices. Let's see if we can get above that and into the bullish control zone. We know in the past as well, like, is that you can do things like look to formations on the RSI. There's a head and shoulders for you right there, and whatever. That could be your neckline, that could be your measured move. Went way too far in the measured move, and stuff like that. So let's try and keep our eye out for things and see if we get anything like that forming over the next wee while. And we never had any sort of I'm not going to get too carried away way about telling us a pattern or whatever, but you don't want to look at the that's so bad, it's embarrassing. But you don't want this to wedge out itself as well and drop down too much. Now, should it do that, and it needs to do that for enough to reset again, then that line that we spoke about, I'd rather see it coming up here above this area and then retesting this before going on up to the next zone. But we'll just have to see how this goes over time. And that the prices, can you be bullish and can you be bearish? Yes, you can. Looking at this area though, it's worth bearing in mind that right here, which you might find difficult to see, but right there, that says 618 there. I've just scored through it. That's the 618 there. This is therefore where we're having this happen inside a golden pocket zone in terms of a potential Fibonacci retracement. This is also a 618 Fibonacci retracement. So we have definite golden pocket area here, and we have this formation. You could see that and then that, for instance, afterwards, or indeed you could just break out from here towards the top side. Targets obviously 420 would be the first one. We want to see 444 and then afterwards going up to the 480. If you're looking at upside targets, you want to see areas being maintained here at the downside at 369, 370 is obviously an area, and then down there at 326 thereafter. Should either the sort of the 320 slash the $4 itself area be broken, then I suppose we could reassess things at that time. You've got the 21 coming in, the 50 simple down there. I'd want to see this act as support should we actually go towards the downside. You can choose how you play it. I'm trying to make the technical analysis of late just fit in amongst your own and to not be biased, to not have any of my own personal bias to impose on top of your own bias. I'm just trying to provide context here in a greed-free, FOMO-free sort of a way and allow you to manage your own trades overall. Occasionally, I suppose I'll say this offers up a low-risk entry for a long or a short or whatever and try and talk about things from that point of view. But just over the last, I have it in my head today that I ought to try and just sort of really stamp on any bias that I might have and remain neutral for over the next couple of weeks just till we see how the overall world and market shakes out anyway myself. So I'm taking that investor sideline approach, which is actually how I feel a lot of people would be acting. And at the minute, and while actually I trade this behind the scenes and keep all my secrets to myself. Lol, major lols. Catch you in the next episode. Thanks so much for tuning in, by the way. If you've got a friend out there you think would like this episode and like me and that, as a character, then share this with your friends. A friend of yours is a friend of mine. Join the Discord, which I've got a link to in the description down below. All that good stuff, and let me know your thoughts as well about how you think the market is going. And I really apologise to the person who actually did let me know their thoughts, because I should have mentioned in this episode, but I've forgotten what they said. So I could only do it inaccurately, even if they did. I guess really what we want to see though is 370 hold overall as support. Yeah, and I really appreciate you tuning in. What have I missed? That's it. Thank you so much. I really do appreciate it. I'll catch you in the next episode. As always, thanks for tuning in. I'll catch you next time.